This year is going to be a little bit of a different year when it comes to taxes owed between buyers and sellers. If that $18 billion tax relief bill gets passed in November. As of last week, the Texas House and Senate passed the bill, and it is now on Abbott's desk to be signed. Once and if it is signed by Abbott, the bill will then be voted on in November by the voters. If passed in November, it will be retroactive for 2023. The main items posed in the bill include a lowering of the school property tax rate for all homeowners and business properties. It will increase the homestead exemption for Texas homeowners from $40,000 to $100,000. It also puts a cap on the annual growth of the tax bills for investment in commercial properties $5 million or below to 20%. According to the news articles, the average homeowner will save about $1,300. It may be more or less, depending on the appraised value of the home being more or less than the average home price in the state of Texas. Well, since this won't pass until November, what does this mean for you? It is important that buyers and sellers now know that their tax bill may actually be less than what it was prorated on for their 2023 taxes. As the title company, we do our very best to estimate the taxes for the year using last year's taxes or the appraised values. However, these numbers that we use are just estimates until the tax bills come out in October. As for prorations, until the tax bills come out, the seller will give a credit to the buyer at closing for the taxes that are owed during the time that they owned the property. For example, if the taxes are $3,000 and the property is sold July 1st, the seller will give a credit to the buyer of about $1,500 at closing. They owe the buyer half of the year's worth of property taxes. Many times, the estimates can be off and the buyer or seller can owe the other money. The seller will owe the buyer money if the taxes are higher than what we estimated on at closing, which is a typical situation that we have seen over the last few years, with the home prices appraising for higher values. On the other hand, if the taxes decrease, the buyer will owe the seller money, which is going to happen if there's a large tax relief bill passed in November of this year that is retroactively effective for the entire 2023. Either a refund will have to be made if the taxes were already paid, or the bill paid by the buyer will be less than what was estimated at closing. The TREC contract states, if the taxes for the current year vary from the amount prorated at closing, the parties shall adjust the prorations when tax statements for the current year are available. In other words, buyers and sellers must get with each other on the amounts owed to the other, although we like to point it out in our language and to the buyer and seller in the contract and also cover it in our closing documents. Many times the buyers and sellers forget about this provision. It is important, especially this year, that you point this out to the buyer that they're likely going to owe their seller some money, and they have agreed to do so under the contract, when and if this contract relief bill gets passed. This is only going to have this dramatic of an effect in 2023 because the tax relief bill won't be voted on until the end of the year, but be effective for 2023. Going forward in 2024 and after, the tax rates and homestead exemptions are already set, and we will know what that looks like. According to Morgan Meyer, this is the largest tax cut in Texas history. And while it doesn't change how much in taxes we will prorate right now, because we don't know if it will pass in November, it is a great idea to keep your clients aware of what will potentially happen in November if this tax relief bill gets passed. As you all know, our day job is closing transactions, which we would love to do for you. Please let us earn your business at the closing table. And if you have an idea for the tip of the week, please email us at tipoftheweek@allegiancetitle.com. Thank you.